Okay, how are we going? Saturday morning, all revved up? Good. There's more financial stuff this morning, and then this afternoon it's strategy. Don't get all excited all at once. I haven't shown you a spreadsheet yet. Good? Do you want to see one? I don't have any. I used to, when I first started presenting on finance, which was about 5-6 years ago, I used to use spreadsheets, and then I just realised that everyone was zoning out. All right, in Psalm 50 it says, I have no need of bull from your stall or of goats from your pens, for every animal of the forest is mine and the cattle on 1,000 hills. I know every bird in the mountains and the insects in the fields are mine. If I were hungry, I would not tell you, for the world is mine and all that is in it. And I'm sure most of us who have been around Christian circles have probably heard that many times. And this is, Dave stole my message yesterday. I don't know, he must have logged into my OneDrive or something. And so I'm going to talk a little bit about stewardship today. But we know that the Bible says everything belongs to God, and he simply allows us the great privilege of caring for it, yeah? And one of the best ways we can do that is to not be wasteful and not be ignorant in our finances or where our money is coming from or going to. I had a conversation with a Christian businessman a few years back. He was quite successful, and he had a small company, but he said, oh, Sarah, I don't really like to look at reports because I just trust that God's doing it right. I'm like, really? You know, I don't know. I agree or disagree on that. But now, I'm going to pre-warn you today. This presentation is going to be a bit confronting for some people, if it wasn't already yesterday. And I'm not a person who sugarcoats anything, which you probably figured out by now. Do you reckon they figured that out, Dave? Or, oh, geez. So I'm going to present some sort of home truths and stark realities about what actually goes on in the marketplace, on the ground. We say on the ground, well, we're not in the air, are we? We're not in a helicopter. But, you know, ignorance isn't an excuse when it comes to God or the law, because there's consequences for actions, isn't there? So is everyone all right with that? You with me? Good. Okay. Number 2. No, that's not number 2. We go back one. Stewardship should be the next one. Maybe 3, maybe it's out of order. Yeah. So stewardship, what comes to mind when I say that word? Anyone? What do you think it means? What comes to mind straight away? Stewardship. Sorry? The talents, yep. Okay. We use that quite a bit in Christian, in church, don't we? Maybe we've overused it. Dave, do you think we've overused it? Maybe. But as believers, we all like to think that we're good stewards of our money, don't we? We all want to, know that deep down the Bible tells us that it's not our money, it's not our stuff, it's not our wealth, but that God owns the cattle on 1,000 hills. Is there a slide that's got that on there? Cattle on 1,000 hills? And he gives us the ability to create wealth. So we all know that. So really, who are we to do whatever we want with our money? Who are we to go spending frivolously on cars, houses, clothes, shoes and handbags, although some of us have a problem with that in the self-control area. But, in the reality is it's going to be burned away someday, isn't it? Let's be honest. When we're dead, we're not taking it with us, are we? We really aren't. In the past 5 weeks, I shared this with Dave and Lisa yesterday, I've been through quite a stressful time personally. on the 13th of January, my 85-year-old father was taken to the emergency department in our local hospital in Adelaide. My mum raised the alarm and he was all wobbly on his feet and he was confused and he didn't sort of know what he was doing. And since then, my 80-year-old mother has been living with me and my husband, and because she wasn't just not able to look after herself, her mobility was impaired. She can't cook, she can't really clean. And at the same time, I'm trying to clean out their house, their unit, get it ready for sale because I'm the landlord. I had to drop all my work, all my events, and just sort them out. Thankfully, a relief, Dad went into aged care this week and Mum moves into a retirement village on Monday. But, you know, this stuff gets you, and this is a reality, and I'm here. And I said to Dave and Lisa, this is like a holiday for me. I'm getting a break. And in some really sadistic way, my husband's home looking after my mother, you know, his mother-in-law. Sounds awful, doesn't it? And last night he rang me, he goes, I'm going out to my local pub, you know, to sit with my friends and have a drink because I need a break for your mother. But, you know, this is life, isn't it? You know, and having to cancel events and cancel clients and everything, you know, all of them understood. I had to send a number of emails in the last few weeks just saying, look, all of these events I was running, they're all cancelled, this is what's happened. And everyone just totally understands. It's heartbreaking, but sometimes this is life. And it gets you thinking about how difficult old age seems for some people. Some people, I'm in a running group, we've got 80-year-olds that still run. Maybe not as quickly as, you know, 50-year-olds, but they're still out there running. But then others, you know, they just have trouble. But it gets you thinking about your life, making the most of your time, and even your own mortality, doesn't it? Because the reality is we're all going to go one day. And, you know, I've been reflecting on the fact that all this rubbish and furniture and stuff that we had to get rid of out of my parents' home, it's only a little 2-bedroom unit, but there was still 13 years of stuff. It's now no longer needed by any of them, by either of them. My dad's in a little room with an ensuite in an aged care facility. He can barely get out of bed himself. He doesn't need a whole shed full of stuff anymore. And Mum's going into a small place too, and they just don't need it anymore. And there was just piles and piles of things that we had to get rid of because they no longer needed it. So, they're not there, okay. So don't get me wrong, I'm all for nice cars, nice clothes, but not if we can't afford it. You know, just like we were talking about the debt conversation yesterday, there's nothing wrong with debt. And I think, Dave, you said something about those four levels of wealth, and I hadn't sort of thought about that, and that the prosperity and the provision is for us, and that poverty and opulence is not. And all of us should hopefully sit in those number 2 and 3 somewhere. But if we can't afford things and it's to the detriment of our business and family, then why are we spending? You know, if we really know that it's to the detriment. Now, I know that no one here does that. No one here wastes money, do they? Does anyone? No. Okay, I know we don't. We're talking about other people. Okay. Yeah, that's right. But we don't intentionally, do we? I don't think anyone intentionally goes out and goes, oh, I think I'm going to waste money today. You know, really, do we? Especially in business. You know, business owners, we're meant to be financially savvy. You know, we're only going to spend what's best for us. We only spend on our staff and our operations, and we never waste, we're never greedy. That right? Yeah, no, wrong. You know, I've worked with a lot of, like, every industry you can think of, I've worked with in business, and whether I was their accountant or consultant. And I've worked with people that are Christian, that are Catholic, they're atheists, they're agnostic, they're Pentecostal, or they're a religious fence sitter. I've worked with all types of them. And if their business is in trouble financially, or if they're doing well in one area but not the other, and they are all making similar bad decisions and not stewarding money well, it's not just reserved for non-Christians or Christians or whatever. The whole group, you know, I'm not saying everyone does, but when I've come across people that are, it doesn't matter what area they come from, what race, what religion. And you might say, yeah, but Sarah, God stores up the wealth of the wicked for the righteous. It says it right here in the Bible, doesn't it? I guess we've all heard that before too. God stores up the wealth of the wicked for the righteous. So all those wicked people out there, he's given it all to us, right? Is that right? Dave, you're the pastor, you know the answer to that. But whose job is it to judge what righteous looks like? It's not ours, is it? Or are we to judge how God distributes wealth? I don't think we are. I'm going to give you some examples and stories here to prove my point before you all think that I'm a heretic or a blasphemous or something. And I'm just going to give you an example. So we haven't got any slides, not at all. Okay, right. So I worked closely with a business for about 18 months in their finance department as a virtual CFO, created budgets, cash flows. I trained some of their finance team. They had about 5 or 6 people in a finance team, all from sort of bookkeepers to accountants to managers, and trained them on some best practices. And when I first arrived there, the CEOs told me they had never had a budget for their business. Now, this business was 15 years old, had probably about 20 million turnover, about 30 staff in the office, so it wasn't any small fry. They didn't really understand finances too well, and they didn't understand why their cash flow was so unpredictable. So it was up and down constantly. And after a few months, I realised that whilst the business, it was quite profitable, there was a lot of money being taken out through directors' loans. And this is, Nathaniel, you asked a question about, and this is why I put that up yesterday, about don't rip money out your company to its detriment. So they were taking money personally, business owners, directors, okay? Now, when I questioned them on this, they said that money was, because there was quite a lot of lump sums coming out, it wasn't just 2 or 3, it was like 50 grand, 80, 100. They explained this was to buy and build properties to house clients who would pay rent to them, okay? So that's a great investment strategy. Buying property, I'm all for it, don't have a problem with it. But there were a few things that the owners were not aware of and they didn't understand, and this is what happened. So when they take that cash out of their company, that's taxable income to them, to the directors, unless they pay it back. Unless they pay it back in the financial year they took it out, right? Which they didn't. So then what happens is there's a large tax bill, or there's a large fringe benefit payment, but that gets a bit more complex. So they didn't understand the nuances of that, of the tax implication. Because of the money that they took out, there became outstanding debts with other government departments. So think, we call it Revenue SA, you probably got Revenue New South Wales, like payroll tax, ATO, and they got some really bad advice from a previous accountant. So all of these outstanding payments had to be put on a payment plan over a number of years because the cash wasn't there. They'd taken it, spent it on the property. Then what happened is the staff internally in the finance team became very disgruntled. They were under huge pressure because those guys were the ones that were managing the bank account. They were doing the payroll. They were paying bills. That was their responsibility. And what happened is they hit a cash flow crunch. So they're paying employees from week to week, never knowing if there was going to be enough money to cover things. So they're all going, hey, what's going on here? Where's the money? What's going on? And then to add to this, these properties were built, then they're empty. They were untenanted for months and months on end. So then the company had to keep paying the expenses attached to that to keep it afloat. So again, like putting money into properties, great, it's not a bad investment decision, but it was to the detriment of their cash flow because in the business, they didn't understand how the cash flowed through and they didn't stick to a budget that was prepared for them. So like we said yesterday, it's all very well to do a plan or a budget, but if there's no implementation and no accountability, it's just a spreadsheet or a piece of A3 paper. The other thing is they didn't adhere or listen to the advice of experts who warned them. I warned them that they would run out of money. I did a projection 12 months ahead, and I said, if you keep taking this money out, you are going to run out of money, like in 12 months' time. This is an example of bad financial stewardship in a company. And these were Christian owners who had their pastor attend the strategic planning meeting, right? So it happens. Sounds like a horrible story, like a doomsday, but this happens. Are you with me still? Is everyone with me? Do you understand? You look very bewildered. But it does. It happens. And it doesn't have to. Like, this stuff is fixable. This stuff is... There's ways of preventing that from happening. And again, we've got to be... When we talk about stewardship, if you don't know or understand this stuff about finances, you need to go and get help. You need to go find out, because I'm not going to fix my own tap or my own car, because if I did, my car wouldn't be going anymore. I'm going to get a mechanic, and that's the point. We've got to get people to help us and not be too prideful as well, to actually ask for that help and go, hey, put your hand up. I don't know what I'm doing. It's okay to do that. Does anyone want to ask a question on that? I've got a bit more, but... Anyone want to ask a quick question?
Sarah, as you were talking, and I was in my head thinking about a solution to that particular issue you're talking about. So... would it be the better thing if you were advising them that they didn't take that money out to buy those properties, but they kept their money in for their cash flow as you advised them, but for their properties, if they'd taken some sort of loan outside or in a trust that's attached to the company, then that would mean that they could then charge, and there'd be a tax deduction for the company for their interest and other expenses to do the property. Is that the sort of thing that you would have...
Yeah, that's what they do, right? That they had all that set up. So this is other entities. I think it might have been a trust. I don't think it was an external entity. But what they were doing is they were using their business trading entity to do deposits. So they built, let's say they built 4 houses. They took 50 grand for that one and 50 grand for, and they lent it to their external trust. But they were taking cash out of the business. Yeah, it's... Yeah.
Instead of getting that tax payable, then if they kept all their money in their business, there was no tax. They weren't liable for tax.
Yeah, that's getting a bit more complicated. I'm not sure how to explain that simply. They were taking money personally to fund an entity that didn't have any way of generating income yet. It was a trust set up, like it was a property investment trust, let's call it that. That's what it was, and it was specifically set up to build houses or buy houses to put clients in. And they had to get the money from somewhere as a deposit, like a 20% LVR for lending. So then they lent in that entity, not in the... But they can pay the money back, but it's still personal income to them as directors if you don't pay it back. So you should pay it back in the same financial year. However, there is a legal arrangement of having you pay like FBT on it, fringe benefits tax, and you pay a percentage on it. It's like a loan to your company. Like the company's loaning you money, so you pay interest on it. And that's all. It is legal, but when you start to do it year after year after year after year, I find that there's a bit of a moral issue with that. Yeah.
The point you were making, though, was they weren't getting they weren't really open to or embracing the professional information.
Yeah.
They were just making a whole bunch of assumptions. So
Yep.
they were in the right sort of space, but they needed to be more diligent.
Yeah, there was no risk assessment on it, and that's why they sat there empty as well, because they didn't do a risk. Yeah. Sorry? Are they still in business? Yeah, they are. So these are my 6 top tips on best practices of financial management. Number 1, save for taxes. I know we did touch on this yesterday, but who likes paying taxes? Has no one got their hand up?
I do, because it means you're making money.
That's right, exactly. Thank you, Lisa. Means you're making money.
I actually do. I do the best for my husband. Well, I don't really. I actually send it off to the bookkeeper. Best decision I ever made. But I actually like it when I pay a big tax bill. I know this sounds weird, because that means we're making money.
Yeah.
I like paying taxes because when you travel and you go to third world countries, let's say, and you drive on some of those roads and all the rest. I just go. I'm not. I remember. I think I was in the middle of Africa, and dear life, just driving down a road, and I thought, I'm never going to complain again about my taxes going to build roads in Australia. I just thank God for it.
And if you've been to India, anyone been? They don't have any roads. They've got cows on the side of the road. So it's a fact of life. Australia is one of the most highly taxed countries in the world. Because, again, like Dave said, we've got good roads, but we've also got a generous social security system. And the reality is that if we're making a profit and you're a business owner, we've got to pay taxes. And that's income taxes and GST. And again, that's a whole nother presentation, but we've got to be aware of the different types of taxes as well, because there's a lot of them in Australia. There's about 130 taxes in Australia, but most business owners would only ever deal with maybe 4. And I think 80% of the revenue comes from 2 of them, which you probably guess what that is. But this area, people don't plan for. I think I was having a conversation with Ross, Vanessa's husband, this morning, and new business, it's the classic example of the tradie, the builder, the plumber, the electrician. They get sick of working for someone else. They're like, I can do it better. I'm leaving. They launch out in business on their own. They go and get an ABN, or their boss says, hey, you're now a subcontractor, get a proprietary limited, ABN. And they know nothing about business. They know how to fix a toilet or whatever, but they don't know anything. And they just go, all right, go to my accountant, get a company, get an ABN, off we go. Don't talk to the accountant for 18 months. Most of them make a ton of money in the first year or 2. They go and buy their 70 grand Toyota Hilux, kit it all out, right? They get a large renovation on their home, put in their swimming pool, got all this equipment, hire people, staff. Then 18 months later, they come back and see the accountant, and he goes, you owe $100,000 in GST and income tax because you haven't lodged for 6 quarters. And they go, oh, but hang on, I haven't got the money for that. Do you know, if I had $1 for every time a business owner said to me, where did all my money go? I actually used to do talks on that. I used to name them, where did all my money go? Because that's what people kept saying to me. I don't understand where my money's gone. Well, we've got to look at our balance sheet. Remember yesterday? Did everyone go home and look at their balance sheet yesterday? I should have put that as homework. But because they haven't planned ahead. They didn't take advice. I mean, I think that we shouldn't be allowed to just go and get a company and an ABN and off you go in Australia. We should have mandatory... Sorry? Some sort of induction. Yeah, we should have I think you can do a Certificate 3 in small business management. Everyone should be having to do that, even if it's a 2-day course. You shouldn't be allowed to just set up an ABN and off you go, because this is what happens. I said to Roz this morning, about 10 years ago, I saw these people go and buy a pub in the Adelaide Hills. And they'd never been in business before. Within 3 years, they'd racked up $300,000 in ATO debt. The ATO shut them down insolvent and they just walked away. Why? Because you can. Not good, is it? I've even seen a Christian tradie give like 20, 30 grand to the church. I'm sorry if this is controversial, Dave, but they've got an overdue ATO debt. I don't know. You can't give out of lack, can you? And that is giving out of lack, because you meant to give the ATO first, and then you can, you know. This is not, and again, this is stuff that happens quite often. And if you're a kingdom business person, then you've got to operate, you know, in the spirit of excellence. Is that what you've got that somewhere on your thing there, haven't you, Dave? You know, the spirit of excellence, do everything. Dave runs these events in a spirit of excellence. When I do events in my hometown of Adelaide, I make sure they're run in a spirit of excellence, that there's no, all the dots, I's are crossed and the T's are crossed, you know, that everything's there. So we've got to save for taxes. Who's going to go away and start saving for taxes? Okay, number 2, have a focus on profit. So how do we maximise profit in our organisation? And even if you're a non-profit sector, we've still got to make a surplus, don't we? All right? And the same principles apply. You know, I asked people, did I ask this question yesterday? Who's in business to make a profit? No one's in business to make a loss, are they? Because if you're making a loss too, that money's got to come from somewhere, doesn't it? So whenever I look at someone's profit and loss and they've made a loss, I say to them, how did you fund that? Because where does it come from? It's got to, if it hasn't come from sales, it's got to come from somewhere else. It's got to come from loans, or a lot of the time, personal monies are being put in to prop up a business. And initially that can be okay if it's capital, but if you're doing that all the time, then there's something not quite right. So when we're talking about maybe we're trying to maximise profit, increase profit, what 2 things can we do to increase our profits? Sorry? Cut costs, yep. Yeah, increase revenue. So, you know, that's kind of a no-brainer. But most people go straight to that. But if we get into a financial squeeze, or there's an economic downturn, we could say there is one at the moment, or there's inflation, you know, everyone goes, hang on, I'm going to put off staff and I'm going to reduce my inventory, I'm going to chase up my debtors, I'm going to ask the landlord for a discount, I'm going to sell my car, I'm going to batten down the hatches, right? But if we're a proactive business owner and if we're thinking ahead, and what we should be doing is spending or investing on more things. Right. So then when we get to that point where there is a financial squeeze, we're prepared and we don't have to batten down the hatches. So I think in the marketing world there's something about always be marketing, or, you know, and we probably should always be doing that, shouldn't we? Think about innovative things to maximise profits. Like one of my clients in not the GFC, the COVID times. He was a blind and curtain manufacturer. His income, I think his revenue went up 40% or something, because everyone was like going, oh, I need new awnings, because everyone's home, new curtains, new blind, like those homeware guys, they just, you know, they raked it in. And the one thing he did was he was prepared for it, because he was a manufacturer, so he had a factory. He had 5 or 6 people out on the floor with all the machinery, but he'd already invested in new staff, other machinery, and so there was a capacity there for him to actually be able to churn out 40% more, whereas if he hadn't, then when he got to those good times, he wouldn't have been able to do it. He would have been turning people away. So when people shrink back when cash flow's tight, that's not always the best thing to do. If you're prepared, if you plan ahead, then you can weather some of those storms. Because who knows, business is like a travelator. It's up and down, right? Up and down. It's unpredictable, you know. Sometimes we've got lots of cash, sometimes we don't. Sometimes we've got too many clients, sometimes we don't have enough. I'm sure we've all faced that at some point in time. I mean, think about a farmer. what do they rely on? Two things that are unpredictable. Weather and animals. They do, you know, if it doesn't rain or there's no sun, they're in trouble, you know. So having a focus on profit too, because when I engage too with business owners, one of the questions, and I'm sure, Dave, you've got this, I give a business owners like a big questionnaire about all different areas. It might be 100 questions of all different areas of their business. And one of them is, do I have a focus on profit? And most people rate themselves out of 10 about a 1 or a 2 because they go, oh, well, I suppose I do, but I'm not sure if I do. But we should all be thinking, I'm in business to make a profit. I need to have a focus on profit or I'm not going to be here tomorrow. Okay, number 3, have at least 3 business accounts. Who's got only one business account? Is anyone going to admit it? Yeah. Right. Okay. Tomorrow, on Monday, you're going to go open a couple more, okay, at least? Because otherwise we've got it all in one bucket, don't we? Right. You know, I've worked with clients who've had one operating account, right? And I said to them, why are you operating out of one account? You don't know what's going on. And they said because their accountant told them to, because it was too hard to reconcile 2 or 3 accounts. And I said, for who? Them or you know? Seriously, they have. That is really bad advice because that money that's in there is not all yours. And if you've ever read Barefoot Investor, not that I've read it, but I've heard things, he talks about the buckets or something, yeah. Yeah. So if your accountant's told you that, I'm sorry to say, get a new one. But you got operating, at least one for GST and super and taxes, and then one maybe for bills. So all of your fixed costs, like your telephone, like we said yesterday, telephone, rent, insurance, all the things that don't really change. That's easy to budget for. Let's have 3.
Great. Lisa, Noah, could you just, great. I've heard the same thing where the client has said, oh no, my accountant told me just to have one account. And I've said to them, the reason that works for your accountant is because your accountant is looking at your accounts through this complex software system. So it's easy for him. I said, the problem for you is that you're not looking at the same software system that your accountant's looking at. You're looking at your bank account and you think whatever's in there, like you said, you all of a sudden you've got to make a decision and you go, oh yeah, the account's flush. What you don't realise is 40% of that money is the tax you owe. Right now, the accountant can see it because he's looking not at your one bank account, he's looking at his software system, and so that's where I think it really does help to have separate like at least 3 bank accounts for your business, because that way, when you look at that, the operating account. You've already taken the GST out of it, or you've already taken, those bills out of it, and so you realise, you go, oh, actually, my cash flow is, my cash flow is 30 grand, not 74,000, and you'll make a decision differently particularly as entrepreneurs, because we've got to make calls, as we're running. That's really important, and you go, oh, well, I won't forget, and it's like, no, the 3 bank accounts is really important.
Yeah. And I could do a whiteboard on that thing, what you're talking about, what the accountant's looking at. Because what the accountant's looking at is reports, right? They're not necessarily looking at they're not looking at your bank account. All they're looking at is the end result. So when the bookkeeper does all the data entry and reconcile, so they get the reports out, and all the report says is sales, less direct costs, less telephone insurance, blah, blah, blah. And that profit and loss could be the combination of 4 different bank accounts, but it goes into one report because we're coding it to those. That's what he's looking at. Yeah. But then if they're the ones reconciled, they go, oh, that's too hard for me to keep track of. Well, again, get a bookkeeper that knows how to do that stuff, because it's not that hard. So number 4 is review reports regularly. We did touch on this yesterday, but it's also about having not just reports, but having data that's clean. What do you think I mean when I say clean data or like real-time data? So up to date, yep. Bank. Yeah, yeah. So it's balancing things properly and having clean data, and that's why Nicole, is it Nicole? That's why you need someone like Nicole, because she understands those nuances. Well, I do, but lots of people don't. Is how you clean it up. Yeah, because it's. I'll use the word again. Sorry, Dave. It's crap in, crap out. Whatever you put in that's rubbish is going to come out rubbish, right? So, because if we don't have that clean data and we don't have correct reports, then how do we make decisions based on things that are incorrect? We can't. And also with those bank accounts, we can't make decisions if everything's in one bucket. And like you said, Dave, how do we split up? Oh, hang on, 75 grand, but 10 of that's not mine, and it's too hard. So if you put it into different accounts, then you can actually make your decisions on it. Who uses a cloud accounting software for their business, like MyUp, Xero, Reckon, QuickBooks, whatever? And you might have a CRM, maybe, but if we've got that stuff, then all of these things should be at our fingertips. If we've got our bookkeeper doing the right stuff and our admin team invoicing and doing all that stuff, we can just press a button and it's all there. You know, I worked with like a HR company or a professional services company last year, and they had all these systems, but they're like disconnected. So what I mean is they use Office 365, they use Outlook, they probably got a shared drive, they got MyUp, got a CRM, they probably use some spreadsheets too, but they're all working independently of each other. So this place was doing, you know, had external employees like temp workers, so they're using MyUp payroll, but then they didn't have a timesheet system, so there was paper timesheets and Word documents, but then they weren't using that software, so they had a spreadsheet to work out all the overtime, and then you plug that into MyUp, and yeah, it was all over the shop, where they could have got an integrated system that the employees clocked into the timesheet app or the timesheet software, feeds into MyUp, it's all there, do the payroll, out you go. And it would have saved hours and hours of time. And also, when that happens, it's not only wasting time, it impacts meaningful data. Because if that HR company wanted to know, productivity of their internal staff or overtime of a company from external staff, they couldn't get it unless they pieced all this info together, extracted these reports and put it into a spreadsheet to try and make sense of it. So it's not only just wasting time and money, it's productivity and efficiency is just completely out the window. So we've got to leverage technology. And again, if you don't know how to do that, we've got to get an expert to help. Savvy entrepreneurs know exactly where their business is at financially every day. They don't guess. I think that's a Simon Sinek saying. Do you want me to say it again? Savvy entrepreneurs know exactly where their business is at financially every day. They don't just guess. Gut feels and educated guesses. Who likes them? Who does that? Me? We all do, don't we? But they can be useful, and of course, we've got to be led by the Lord as well. And what did you say before, Dave? Something about knowing whether something was right when you were up here. Can't remember. Yeah. Oh no, if something didn't have peace about it. Yeah, right. So if you don't have peace about something, of course we've got to go along those lines. But what I'm talking about is if you're going to make a big financial decision, you're going to outlay a large amount of money, you're going to spend infrastructure, lease a new premises, get a new staff member, buy a new car. Has anyone asked themselves those questions? Can I do that? Has anyone asked themselves that in business? You might want to get a new commercial shop. You might want to buy a whole lot of inventory. When you need to do those things based on financial facts and data that's clean and reports that are accurate, don't you? Because if your finance person gives you a report and you go, yeah, I think I can afford to do that, and then later on you find out it's wrong, that's not going to be great. And also we don't just want to do it on a gut feel. We don't go, I think I need a new person. It's busy. I think I need to hire someone. But, just don't do that unless you know you can afford it. That's why we need these reports, so that we can base our decisions on correct financial data. Or we're just guessing. Number 5, know your margins. So things like, other type of metrics like what's your cost of goods percentage? Especially if you're a product business. If your cost of goods is 80%, depending on what industry you're in, it's probably too much, I would say. Break-even point. Does everyone know what their break-even point is? Does everyone know what a break-even point is? So, the minimal amount of money that you need to cover costs before you even make a dollar. We need to crunch numbers on that. If you retail, wholesale price lists are something that I've seen a lot of business owners not update. You should be updating that stuff regularly, because your supplier is going to change their prices probably every 12 months. And if you don't, then your margins are shrinking. And timesheets and work in progress, definitely, because in professional services, you're charging clients time for money and you're paying your staff money for time. So we've got to know our margins on all of that stuff. And my last, yeah.
Margins on service businesses. I understand I've worked with margins on like tangible stuff. What about the intangible?
Well, it's the time. So it's, okay.
Yeah.
With the HR company, their margin was Foodland comes to them, we need temp workers. They pay the temp worker $35 an hour and they charge Foodland $55. Yeah. That's their margin. Yeah. That's what I mean. So like in accounting or bookkeeping, you pay your staff, $50 an hour and you charge the client $150. That's what I mean by margins on that. Three to four times on your staff, it should be. If you're accounting, financial planning, or even any staff, really, yeah, it should be 4 times. If you pay someone $35, you should be getting $140 an hour out of them. Oh, well, maybe. No, probably should be plus GST, yeah. Plan for the future. I know we touched on this yesterday, my final point, and we'll go into questions. Cash flow forecasting and budgeting, again, we've got to do this not just to tick a box, but to review regularly and see where we're at and do budget versus actual every month to see if we're hitting targets. If we don't plan for the future, then it's easy to get into trouble, and it's better, especially in the accounting world, when your accountant will charge you a heck of a lot more to fix up an error later on than what they will if you got it, right in the first place. So just like, the tradie example, that's a costly mistake to get into 18 months down the track, not just for the ATO, but to get a bookkeeper or an accountant to fix all that stuff up. It's a hefty bill. So we've got to be planning for the future. So that is my take on financial management best practices. Hopefully didn't overlap too much of yesterday. But